Hi there, here's a trade for you. Chris here with OptionMillionaires.com. Okay, so I hate earnings season. As a technician, I can't stand earnings season because earnings are one of the things that technical analysis is very bad at predicting. But we can always react to earnings. But why even bother? So I'm actually looking at an ETF, the XLB Materials spider. So why materials? One, materials is the most leveraged sector in the entire market right now. So if I think the market's going to go down, which I do believe it is, then materials are going to be hit the hardest. Two, it has a pretty high beta, 1.38, this specific ETF. And four, if I believe that there's going to be deflation, which seems Ben Bernanke thinks there's going to be at least some disinflation. The CPI is showing that the Fed hasn't been able to keep the inflation rate at their target rate, and like in other countries, like I think it just showed up, Switzerland is actually having deflation right now. If things are going to start deflating, that means that the companies that rely on inflation are also going to be hit the hardest. So from everything I've said, you're pretty certain that I'm going to recommend a short. So what I'm seeing right now is, number one, we have a large triangle formation, which gives us, actually, let's even zoom this out. Let's zoom this out even more and see if we can extend the trend line at all. Well, that'd be a trend line break right there. But right here we can say we have a large triangle formation, and it gives us a price target of, if I zoom this guy out, top to bottom, minimum price target of at least about 21 bucks. So that's the minimum price target. If I want to do the actual maximum price target, which still it's also not necessarily maximum, that gives us a target of about 1750. So that would be on a breakout right here. Okay, so that's the first part. Big pattern right there. But the second part is if I go into a 2-year chart, and this is much easier to see, what does this look like right here? Head and shoulders reversal, right? So if this is a head and shoulders reversal, that means that first we want to see a breakdown below 3250, which, if would happen, would also break down from this triangle, and that would give us a short-term target of, let's see, top to bottom projected from, stop it, projected from the bottom gives us 2750. So there's a lot of things that you can do with this. Like if it breaks below 3250, so short below 3250, if it breaks below there, you have a long-term signal, a short-term signal, and let's see if there are any moving average signals on this too. We'll do 1, 2. If I put on the 50, and if I put on the good old 200, I know it's already down below them, but if you see right here, if you like moving average signals, this guy right here, the 50 crossing below the 200, that's called the very intimidating name, the death cross. But anyway, you see on this ETF, even though it's not going to like do what I said Facebook would do, which is go down 8% in one day, it's not going to do one of those. It's still a very good long-term short trade. All right, so short below 3250. First target is 2750. Second target is about 21. Third target 1750. You could place your stop if it would break below that area. So let's say that this is what I call a Chris Diodato reversal, where you get in the trade and it immediately goes against you. So you get in at 13.49, and that's the lowest price of the day. You put your stop loss at about, you could either do like 34.17, or if you are willing to hold for a little bit, anywhere above 35.50. All right, thanks for watching.